Hi guys, I am Keshav and I am in the market from a lot of time. So आज हम डिस्कस करेंगे टाइप्स ऑफ ऑर्डर्स के बारे में. दिस इज़ वेरी इंपॉर्टेंट इफ यू आर स्टार्टिंग इनटू द मार्केट और यू नो आर इवन इफ यू आर एक्सपीरियंस ट्रेडर. तो शुरू करते हैं इंट्रो के साथ. Okay, so first of all, disclaimer that I'm not a financial advisor and this is not a financial advice. This video is only for entertainment and education purposes, and crypto is very risky asset, so do your own research before investing. So I have written a very good thread. If you want to check that out, you can. And I'm really sorry, I am really in a hurry because I have a flight to catch for Mumbai today, and this video is going to publish on Saturday, tomorrow, right? So today I really want to show you that how to execute trades on Bybit, but I'm trying it for like I tried it several times, but the terminal is not working right. So I have to just explain. So right, first we are going to discuss about market orders. Market orders is when you set the when you are buying a asset on its current price, right? Bitcoin is 62,000 something, right? So if I put a market order, so it will execute this trade on the market this price only, right? Or even higher than that because of liquidity, right? So there, other than market, second comes the limit price, right? Limits used for traders who want to buy an asset at a certain price. Like if I'm doing my technical analysis and I see there is a support at specific price, or I want to buy it on the opening of this big candle, right, which is 56 or something. So I put a limit order here, and when the price reaches 56 or 56, it will fill my order, right? So, and also one more difference is that limit order is only you can put limit order only for buying at the lower price, but you cannot put limit order for selling at the lower price or use it as a stop loss, because then the order will, if you sell at a lower price and put a limit order, it will execute immediately. That's a very rookie mistake which I used to commit earlier. So don't do that. Because the orders are directly sent to the order book, right? If you can see here, this is the order book, right? So your order is visible to whole market or in the order book, right? And for stop losses or target prices, you can put stop loss order or TP order, right? So here there is a trigger price and there is a order price. So what we put a trigger price. If imagine that I have to sell my Bitcoin at 65,000, right? So I put a trigger price at 65,000 and put a order book price of 64,999. Why? Because if there can be liquidity issues, and there can be there can be chances that order triggered but not executed because there are not enough liquidity there, right? So it can happen, and it happens a lot. So I suggest, if you putting a trigger price, set one point your order price are lower. So when the price reach your trigger price, the order sent to the order book and it will get executed, right? And also we have conditional orders. Conditional also is also same with same like TP and SL orders, and we have now OC orders. It is also called bracket orders, right? So what are bracket orders? I used to do stock market earlier, so where we call these types of order as bracket order. What happened is, when you put a trigger order, right? So the exchange terminal blocks your amount, that you can't do anything else with that amount, right? So so what if I want to put a stop loss and a target price at the same time, right, for a trade? So I use OC order, right? So OC order helps me to put a stop loss order at the same time and a take profit order at the same time. And for both, I can do it on a market or a trigger. I use it as a trigger price. So it is more advanced type of order price, which you can use a lot. I use a lot of time, and I really suggest, if you taking any trade or taking anything, please use stop losses. And there is a very rookie thing which like a very rookie complaint which a lot of traders used to observe, that their stop losses are always get hit, and they become victim of liquidity grab. So what the solution is that your stop losses are not at right levels. That's why they get hit. So I'll let you open a chart and quickly show you where you can put your stop loss. So if you see here that there are wicks, right? If you are putting stop losses, you have to keep in mind that every asset will have a different stop loss. You can't have a standard stop loss like a 5% stop loss or a 10% stop loss or 20% stop loss. This can't happen because volatility of every asset is different, right? And market makers in that asset are different and stuff like that, which affects the wicks. And you see these wicks, these are liquidity grabs, and if you have a standard 5% stop loss, you are, if at this asset, you are easily be victim of liquidity grab because the volatility of the asset is 20% or 33% and stuff like that. So you have to put it accordingly, and I prefer that if you are good in using support and resistance, try putting a line here and check where is the how much volatility is there, and try to put stop loss below that. Right, if there are huge wicks, try to put your stop losses below that, right? So you don't get victim of liquidity grab, and if there is any uncertainty in the market, you can tackle. And that's it for this video. I wanna give a shout out to Safepal. I've been saying again and again, if you are in crypto, you really need to have a hardware wallet. It's a must. So check out Safepal. You will find its link in the description below. And that's it for this video. Trade well, guys. Bye.